Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. Happy Sunday to all of our listeners out there. Happy Sunday to my two guests on my show today. Well, not my guest co-host Tony Shore. You're always on my show, so but you is special. You're still special. You're special to have on my show. You're very special. Right. Well, we're not going to tell all listeners and viewers about how special you really are, Tony, but you are special to me, my man. You've been an awesome co-host for me on this show for almost 2 years now. It's been an amazing blessing to have you as part of my team and part of my radio show, part of my YouTube and my podcast. So thank you for everything that you've done for me, because you are special to us, Tony. No matter what your wife and your boss and everybody else says. I mean, you're a very special individual.
Too true. Thank you, Jason.
And then we have another very special individual with us today, the guest of our show today, Mr. Keith Gangl, a portfolio manager from Gradient Investments. And Keith, it's always awesome. I say it every time I have either you on the show or Jeremy or Tyler or Mike, but any of the portfolio managers. It's an amazing relationship that we've been able to build with the Gradient Investments team and all the portfolio managers. And it's really is a special honor when we're able to have you on our show as a guest and kind of what I call speaking from the trenches, because all of the families that entrust in me and my team to help them manage their portfolio and build them financial plans and retirement income plans, all of them trust in me. And they always, a lot of times they ask, well, where do you get this information from? And who's really in the trenches managing the money and who's calling the shots? And to be able to say, well, it's a team, it's a very high level team of analysts and CFAs over at Gradient Investments. It's a great story, but to be able to actually say, listen to my radio show, watch my podcasts, and even come to some of my events, because I have the portfolio managers themselves from Gradient Investments live on my shows. I have them live on my events. I have them on my podcast. So it's a really cool relationship. And so, Keith, thanks again for you and the team over there at Gradient Investments for being such an amazing part of our family and being able to serve the families that we serve.
Yeah, thanks for having me. It's great to be back.
Yeah, it is good to be. I don't remember the last time. I think it's so. Usually we have. I think it's about the second Monday of each month that we have a guest on the show from Gradient Investments. So 2 or 3 or 4 Mondays ago, probably is the last time we had Keith. And there's a lot that's happened. I mean, there's a lot that's happening in our world. But before we get into the really the guts of the show today, which is going to be all about tariffs. I mean, the old T word. I mean, you can't talk to anybody nowadays. Turn on the TV, the radio, Facebook, whatever it might be, and hear something good or bad about tariffs. And so that's going to be a lot of the meat and potatoes about the show today. Is Keith's going to go very, very deep into, what are all these tariffs and who pays for them? What do they mean? And what are the good and bads and uglies and in betweens? But before we get into that, let's talk about you guys. How's everything been going in your personal lives? I'll start with you, Tony. How's everything been going at home and with the kids and mom and dad? And we're coming out of winter, getting into spring. So what's going on in the Tony Shore life?
Well, I'll tell you what, my life and everyone around me has been enjoying the great weather. We have amazing weather right now.
Nice here too.
We could get close to the upper 60s here today or tomorrow.
Oh, nice.
And sunshine. We've needed that. It's been, crazy winter. Hasn't been a bad winter snow wise, but we just had a blizzard about a week ago. And they say we could get more snow on the weekend. So I'll take during the week. We're going to take the nice weather. Like you said, spring. I love spring. That's what's going on. And we're just planning a lot of home projects as the weather gets nicer and keeping busy with family. That does it for me. Keith, how about you?
Yeah, last week was the state high school hockey tournament. Minnesota, that's top notch. So 18,000 people come there daily to watch high school hockey. That's impressive. So
wow. Now, how many games did you take in, Keith?
I went to 3 games. So I went Friday to the semifinal in the A class, which is a smaller school. Fantastic. Normally that region is half full that day, but it was like full. It's crazy. And then you go to the nighttime, which is the 2 AA games, and they're great. Stillwater, where Tony's from, was actually, they ended up making to the final. They didn't win it, but they made it to the final. So, but it's just fun. Even if you don't like hockey, it's just a great event. It's like, it's nothing like anywhere else in the country.
Yeah, they call Minnesota the state of hockey, right? So the state hockey high school tournament, it's like as big as college football is in the South. I mean, it's huge.
Yeah, Minnesota's always been. I mean, I grew up playing hockey my whole life here in Michigan, and Michigan's known as hockey's is a.
Oh, yeah.
I guess it's not the number one sport, but it's a pretty big sport with the Red Wings and, of course, Michigan State, Michigan, LSU, Northern, or LSSU, Lake Superior State. There's a lot of college hockey here. High school hockey is pretty good. Travel hockey, those types of things. But the Minnesota, the hockey that, when I grew up playing hockey, it was, if you weren't from Minnesota, you were a nobody, right? And we would always idolize and watch even other kids our age that we had heard about or seen at these tournaments that were from Minnesota. Just an amazing hockey state of what you guys pulled together over there. And it's, hockey being part of my life, obviously, and Keith being part of yours. So why were you at those? Did you have a family member, a friend? What makes you go to those?
Yeah, I go every year. So it's my son, who is now a senior, him and his buddy, we've been bringing them since probably they're in third grade. Me and another dad bringing the kids down. We used to stay a couple nights in hotels. We're getting a little older for that, so we just hit a day or two, and we hit a full day on Friday. So it's fantastic. The boys get to enjoy it. And actually, his good friend that we go with, he was actually in it last year for Elk River, a high school.
Oh, really?
That was even more special to be able to watch a kid that dreamed of playing. My son stopped
playing
hockey a few years ago. Now he plays tennis, but it was just such a pure pleasure to watch him play, in such a huge stage. And then this year they didn't make it, but he's still go and watch. It's fantastic.
Yeah, it's one of the biggest sporting events in Minnesota. And so people who don't have kids in high school still go.
Yeah.
I mean, hockey fans go. That's how big it is. People don't realize how big of a deal it is. I mean, it's an event.
There's people have season tickets for like 30, 40 years. And
are you kidding? Season tickets to go watch the high school?
Yeah, so it's just that event, but it's like they got their same seats every year, and they're coming. Like I said, they'll sit there 3-4 days, and we usually, like I said, I'm getting a little older, so I'll do one day or two, but it's quite a fun.
Now, is that held at like a university where it's a multi-rink stadium, or is it held at the NHL stadium, or where's that held at?
Yeah, Excel Center, so the NHL,
the Minnesota Wild Stadium.
Wild play, and then if you
I almost said Minnesota North Stars. Did I age myself?
Yeah, you barely.
I almost said Minnesota. I almost said Minnesota North Stars, and geez, that would have.
Yeah, and if you end up on the consolation side, you end up going down the University of Minnesota again, another great place to
absolutely
as well. But it's if you're on the main stage, it's at the Excel Center where the Wild play. It's fantastic. For the kids' memories, they'll never forget it. Just
what an experience! I mean, think about that for those, because you think about the high schoolers. So now we're talking about 14, 15, 16, 17-year-olds, and that experience to play at that arena and in front of that type of crowd that and the reality is a good chance of them. A good majority of them, that's the last chance they're probably going to have to play hockey at that level, right? I mean, in high school, they might go off to juniors, they might go off to college, but that many of them, a majority of them, that's their last hurrah. So what a phenomenal experience.
That's good.
Yeah, and there have been rumored to be a lot of NHL scouts at the state tournament at the XL Energy Center.
I bet, yeah.
And a lot of the bigger players who are going to go into the NHL aren't even in this level of hockey because they're at a different level, or they leave sooner.
Juniors or Michigan programs. National.
Yeah,
team.
so it is pretty amazing. I mean, outside of Minnesota, people really don't. The closest thing might be high school football in Texas.
That would be
probably
bigger, but I mean, same type of scale.
Yeah, that's awesome. How cool. Well, that's awesome. Well, thanks guys for bringing us up to speed on what's been going on with you guys over here. Tony, you and I talk all the time about how darn busy the Crydermans are with our kids between Carson and Josie and Lexi. And believe it or not, I'm breathing a little easier today, a little more comfortable, maybe a little more well-rested, because we are into about a 2.5 week lull, where the girls are done with competitive cheer. They had an absolutely phenomenal season. I think the last time we were supposed to record, we actually missed the recording because the girls had their competitive states cheer comp at Central Michigan University on a Friday. And I'm known as Cheer Dad, whether it's the sideline cheer at football or whether it's the cheer competitions. We're in these big stadiums. I'm known as Cheer Dad. I'm very, some people have said obnoxious. I like to say supportive. So I get really pumped up and involved, and I scream my little head off. And so at the state competition 3 weeks ago, I lost my voice. And so Saturday I thought, well, it'll be back by Sunday. And Sunday I had about half a voice. And so when we record these shows on Monday, excuse me, speaking of voice, I think I'm still having a little bit of
lingering weakness,
lingering issues. But
effects, yeah.
So it was on finally Monday morning, and we're getting ready to record the show. And I got on with Tony, and I said, "Hey, Tony, it's Jason." And really, like my voice, I said, "Hey, Tony." He's like, "What the heck happened to you?" I said, "Well, the girls had their state cheer comp on Friday." He said, "Well, your voice sounds horrible, but how did they do?" And I, of course, he didn't really care much about me. It was all about the girls, right? So the girls did absolutely phenomenal. They took third. So they were district champs, undefeated until district champs. They took third in regionals, and then they took third in states that Friday. So between Lexi and Josie being on the same varsity cheer team together, what a phenomenal season they had. And so we didn't record that day because I said, "Hey, Tony, do you think we could record?" And he said, "No, your voice is so bad right now that let's just skip this week." So we skipped a week or two there. But so now we're in kind of a lull because the girls don't have any of their athletics or extracurriculars going until track starts. And they actually just started high school track practice today. And I think we have about 3 weeks before our first track meet. And then Carson, he wrapped up his travel basketball season there a few weeks ago. So now he's in a lull. He's just got twice a week. He has his travel baseball practices, and he's not going to run track. He's going to just focus on baseball this spring. And so he won't have anything for I think we have his first travel baseball tournament in mid-April. So it's crazy. Like Amy and I were talking this past weekend thinking, like, just kind of sitting there twiddling our thumbs on Saturday morning. Like there's not a lot. I mean, we did a lot of family things together. We got a lot done around the house and everything, but it was weird. It was really weird.
You're like, what do we do now?
It was really weird not to be chasing our tail every minute of every hour, wondering where do we have to be and how long do we have to get there. We have Carson's event, and Josie's event, and Lexi's event. And it was, so right now, as I mentioned, we're kind of in a little bit of the calm before the storm, as before spring sports, gear right up with travel baseball and Little League, and then the girls' track season as well.
Yeah. Well, you know what, Jason, this is great. And we're going to jump into some market updates, talk about what's going on with these tariffs with our very special guest, portfolio manager Keith Gangl from Gradient Investments. But first, we need to take a quick break to let our listeners know if they have questions about today's topic, or they want to get a hold of you to set up that no charge, no obligation consultation. How can they do that?
Yeah, so if you're a YouTube watcher, if you're not a YouTube watcher, please jump on our YouTube channel, be a listener, be a subscriber, be a follower. But if you are watching on YouTube, right on the bottom, it says our phone number there, and it's 989-835-7203. That's calling the office directly here in Midland. Or you can get on our website, which is GreatLakesInvestmentAdvisors.com. So either of those ways are great ways to get a hold of us if you have questions about anything we talked about on today's show. If you have any other generic or general questions, or maybe very, very specific questions about you and your situation, or if you have questions for Tony Shore over, what's going on over in Minnesota, right, or you have questions directly for Keith Gangl or another one of the portfolio managers about Gradient Investments portfolios, maybe their management philosophy, maybe something you hear Tony talk about on today's show, or you have questions that you didn't hear us talk about, but they're questions or concerns you have, by all means, give us a call at that 989-835-7203, or get on the website at GreatLakesInvestmentAdvisors.com.
All right. And I want to remind our listeners, we are going to be giving away copies of Jason's book during our next 2 breaks, but you'll have to wait for that. We're going to give away some copies of the book, and we'll be doing that during our next break. But let's get into our talk with Keith Gangl right after this. You're listening to your Financial Empower Hour with our host, Jason Cryderman. I'm your co-host, Tony Shore. And Jason, in our last segment, when we kind of got up to speed with where everybody's at and what everybody's doing, you introduced our guest, Keith Gangl, who is, I want to remind our listeners and viewers, he is the portfolio manager at Gradient Investments. So, Jason, I know you have a lot of questions for Keith, and I'm sure our listeners want to hear what he has to say.
Yeah, I really do. First of all, again, thank you, Keith, for being a guest on the show. It's always awesome when I can have you and another member of or any other member of your team come on and kind of, as I mentioned before, for our listeners on the radio or for our viewers on YouTube, you can see Keith sitting right there live. It is so cool, and I think so powerful and so empowering to have somebody who's literally in the trenches. Like Keith and his team, they're the ones doing the research, like what's going on with Bitcoin and what's going on with, large cap and what's going on with international and stocks and bonds. And they're the ones doing the research on a daily basis. And they're the ones also calling all the shots inside the portfolios that they manage. Why do they own what they own? And why did they sell last month or last quarter what they sold? And why did they buy what they bought? So it's really powerful, I think, and really empowering for me and the families I serve to be able to talk to these guys face to face. And as I mentioned, not only on the radio show, they come over here quite often and do live events for all of our clients. And so that's pretty cool. So Keith, thanks again for the relationship and the support that you give us and all the clients that we serve.
Yeah, thanks for having us. It's a great pleasure working with you.
Well, thank you very much. And I mean, a lot of people, you've probably seen Keith and other members of his team on a lot of different news outlets. I mean, they're sought after almost every single day of the week. They're doing different major publications across the United States. And so it's pretty powerful and pretty cool to have you on my show for a few minutes. So I want to jump right into the topics that I don't think anybody can right now turn on the radio, open up a text on your phone, get on Facebook, the news. We can't go anywhere right now and not hear about the T word. And that T word is tariffs. And as soon as I say that word, I'm sure some of my listeners and viewers, like the hair stood up on the back of your neck, like, oh, tariff.
Not again.
Not again. Well, so Keith, what I really want you to do is, I know you just did a big episode, a big training on tariffs. And so what we're going to hear today for my listeners and my viewers is we're going to hear Keith Gangl, portfolio manager for Gradient Investments, kind of go through tariffs. And we'll talk about probably 3, 4, or 5 aspects about, first of all, what the heck are they? What's a tariff? What are the goods and the bads and the uglies? Who pays for it? And so really, let's jump in right there. So again, it's awesome to have Keith on the show today to talk about, what's going on really with these tariffs. Because again, there's a lot of misinformation, there's a lot of assumptions. But Keith, can you let's keep it real simple from the basics to start, and then I'd like you to get a little bit deeper into the pros and cons and goods and bads. But can you just tell myself and all my listeners and all my viewers out there, can you just tell us, Keith, first of all, what is a tariff and who pays for it?
Yeah, that's a great question. Exactly, get everybody on the same page here. When you hear tariff, the natural reaction, which is the right action, a tariff's a tax or a duty on goods between countries, right? And there's different reasons for using tariffs and who pays for them. But so that being said, when we put tariffs on a different country, we're putting a tax. And when you hear the word tax, that definitely has a negative connotation, right? Because people don't like taxes. Taxes cause the price of goods to go up, and that's exactly what happens with tariffs. So right now.
Real good. So if it was a tariff against Canada, that means for them to send their goods in, for us to accept their goods over here, we're going to tax them more.
Exactly.
And I'm guessing we're already charging them something. Let's say we're charging them a quarter, but now we're going to charge them 50 cents. That's kind of what you're saying, is we already have a charge to accept their items over, but we're going to increase that charge.
Yep. There's 3 different parts.
Tariff, which is a tax.
Yep. The person, actually the company importing the goods, right? So and then the person that exporting, which is Canada in the situation you just talked about. U.S. companies are importing, and then we have on the third party would be the consumer, right? So the person coming in has to pay the tariff, which would be the actual importers. That means we're charging another 25 cents on whatever items come from Canada, that nickels, that situation you're just talking about.
Yep.
And what the importer does, they try to pass it on to the consumer. And so that's the 3 parties involved. And the importer will say, well, if I'm charging this tariff, we're going to pay you less. So maybe the exporter gets a little less money. The importers either got to eat the cost or they're going to pass on the consumer. And everything's different. Like automobiles, for example, the tariffs on an SUV, the parts are manufactured in Canada, Mexico here, and moving parts, but that could increase the cost of an average SUV about $5,000 to the consumer. Now it's assuming they could pass it on, right? The importer may say, well, Canada, we're getting part of this from you. You add 2,000, we'll take 2,000 off.
Sure.
$1,000 gets passed on to the consumer. But net, there's an extra $5,000 in the system that someone's going to have to pay.
Sure.
The importer and exporter want to pass it on to the consumer. Now, at some point in time, the consumer says, enough's enough. I can't pay anymore. And you're right. Tax. I mean, the other thing that we need to talk about is tariffs been around for a long time, right? They've been certainly in the news since Trump 1.0. In 2018,
Mm-hmm.
he had on tariffs to China because his trade imbalance. He wanted to fix that. Those tariffs went into place, and even the next administration, the Biden administration, again, two different presidents, they actually kept almost all those tariffs in place. And again, usually when you hear the headline of 10%, that's not exactly 10% all across the board. It's certainly usually on a product or some kind of consumer goods. But that being said, those tariffs are in place. And you're right, those tariffs have been around for a long time. If you can go into lumber, for example, we put a 16% tariff on lumber coming into the US, right? So that costs a home builder's prices to go up a little bit more. So now if you're going to put another 25 on top of that, the end result could be a more expensive house, or maybe the importer eats some of the costs, or maybe they go back to the lumber coming out of Canada and say, well, you got to lower your prices because we're importing and our consumers can't afford to pay another 25% on top of that. So those are some of the things, on, big picture. And we have a chart up here. And the three big trading partners that we import from are, China, Mexico, and Canada. They make up 42% of all the goods that come into our country.
Wow.
And, which is a lot, right? And you look at Mexico, now they're our leading trading partner that we import from. We do about 15% of that at 42. China's down to about 13.5. Canada's a little bit less at about 13%. But the one interesting point I'd like to put, back this up is if you go back to 2017, China actually made up 22% of our goods we imported. Now, like I said, that's down to 13.5%. And that was designed by the tariffs that, Trump and Biden actually kept into place. So, we're a lot less dependent on China because of what these tariffs. So there's usually some negotiating behind the scenes besides just the tax people see. It's like, okay, well, I guess the goods coming from China, we're not so dependent on anymore. 22% now down at 13.5%. And I have a feeling that number is probably going to go slightly lower. Now, our friends to the north and south, they've actually increased. But it'll be interesting what these, blanket 25% tariffs actually mean for, the guys who are importing and exporting. So I think again, it's the art of the deal with Trump. There'll be some negotiations going on the line. And we even seen it right now with Canada and Mexico are supposed to have a 25% tariff in effect. They basically X'd out most of the industry.
Yeah.
Autos, it's get pushed onto the curve to the month. I think
Sure.
there'll be some number, but it'll be a lot smaller than 25%.
Well, I think that was interesting. You mentioned this is one of the areas that I try to, I know enough about this stuff to be scary and dangerous, right? That's why I entrust in the professionals like you that are in the trenches and in the know. But that's one of the aspects I've really, kind of heard and learned about these tariffs right now from President Trump is a lot of them are a negotiating tactic, right? If you want something, you say let's just say he wants 15%. If it's a percentage he's looking after. But I really think behind the scenes, there's a lot more than just a tax or a tariff he's looking for. There's a bigger picture behind the scenes of things he's looking to accomplish from these countries. But let's say it is just a tax. Well, really, if he wants 15%, he's not going to tell him I want 15%. He'll start out at 25. And then they'll say, how about 5? And it's negotiation, right? It's negotiating the terms. And I think what was really interesting, I didn't think about with tariffs that you mentioned, Keith, was there's actually negotiations. Let's say it is a 25% tariff. That doesn't necessarily mean that Canada, the US, Mexico, or the consumer is going to have to soak up 100% of that 25%. They can negotiate with each other to soften the blow on everybody involved, kind of spread the tariff, if you will. I didn't know that. So I think that's pretty powerful as well.
Yeah, it is. And that's the other thing. I mean, the bigger picture that, kind of we talked about, what they are and kind of who are our main importers. The other big thing is ultimately what Trump wants is we have a trade imbalance. He wants to normalize that a little bit. Like basically the U.S. consumes about 29% of the world's goods. We produce about 15%, right? So just by that number, there's a 14% delta. Even if everything we make ourselves, we consume, we still, he wants to shrink that number to get it more closer to if you're making, 20%, maybe that number to 25. So, because you look at other countries like in Europe, it's they consume about 15% and they export about, they produce about 14 or 15, very close. Now, the one thing that's a lot different is China, where they produce 32% of the world's goods, but they only consume about 13%, right? So, China's driven by, the U.S. is driven by consumers, and China is driven by exporting their products.
Exporting out to other countries for the consumers.
Part of what Trump wants to do is, if they're producing those goods, why can't we produce them here in the U.S.? kind of create those, those jobs
Sure.
in the U.S. and kind of close that gap. Now, can we ever close it? I don't think we can completely close that, because the U.S. are consumers, right? They'll probably buy and spend. U.S. consumer has money in their pocket. They like to spend. They also like to look for deals. And a lot of the stuff, you go back, decades, and it was because China produced cheaper products, and that's why they were able to export as much as they do. Now Trump's trying to normalize that a little bit. And so that's part of what you like you said, behind the scenes, what's going on with tariffs. It's not just what you see in those headline numbers of 25%. I don't think that's going to happen, because 25%, that's a pretty big negative. There's other stats we can, talk about, is how does that impact, the workforce? How does it impact GDP? It's the reason that Trump thinks he can do this is because even if we were to put 25% tariffs on Canada and Mexico and 10 on China, that's going to impact our GDP by about 0.3%. Just think our overall GDP is right now about 2.5%. So that's roughly a little more than 10%. But the impact, is probably about almost 3%. That's kind of what the economists are saying, and 3.5% to Canada, Mexico, and China. It's like that would put those countries, their GDP is less than ours anyway. That would put them in kind of a deep recession. So that's kind of what he's trying to get some gains for the U.S. and kind of, trying to pull some of the products back into the U.S.
Yeah. Well, I think it was interesting how you pointed out right now that some of the tariffs that Trump put into play back in 2017, 2018, in his first term, those tariffs. So I think it was like you mentioned China, like we had a lot more, and it was almost 50%. If I don't remember the statistics, but I think it was almost 50% that we reduced our reliance or our dependency on products and goods coming in from China because of Trump's tariffs he put into play in his first term. So, and if you think about one of the big things we always hear everybody say is reduce our reliance upon China, right? Reduce that, we can do more. So that was a very positive tariff aspect at that point. And obviously the Biden administration believed in that because they kept it into play. And we all know that there was things they didn't believe in and they abolished immediately, but they kept that into play, and that reduced our dependency on China imports and China goods by almost 50%. So that to me that says there are very positive, powerful things that could potentially come out of these tariffs. Now, are there negatives? Sure, absolutely. And we've talked about some of them, and I'm sure, Keith, you're going to help us go through some more of these, especially when we talk about which products, which industries could be hurt. And so let's move on into the next segment. We'll kind of touch on some of that as well.
Yeah, that sounds great. But first, let's give away a few copies of your book, Jason. Empower Your Retirement is the name of the book, and Jason wrote this amazing book. It covers so much about saving and investing for retirement, a retirement income plan, how you can plan for all this. Empower Your Retirement. There it is. Right there's the book. You can get your own copy of the book at no charge. You won't even have to pay postage. All you have to do is be one of the first 10 people to reach out to Jason's office and tell them you heard about it on the radio show, you saw it on the radio show on YouTube, or you listened to the radio or a podcast of the show. Just reach out and say, I want a copy of Jason's book. I heard about it on the show. That number is 989-835-7203. That's 989-835-7203. And we're back with your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our host. The man with the plan is, of course, Jason Cryderman. Jason, great show today. You've been talking to Keith Gangl. Keith, great job. Keith is with Gradient Investments, a portfolio manager there. So, Jason, what's your next question for Keith? I think we're going to get into what's happening with the markets, maybe get an update, how these tariffs have affected things.
Yeah, I think so far, Keith, you've done a phenomenal job just kind of, and I would call it from a very basic level too, explaining what are tariffs and behind the scenes and why are they being used. And I want you to go into, before we talk about the impacts on the market, can you go into maybe a little bit about some of the, and I don't know if it's top 2 or 3, whatever you think is pertinent, but the benefits, potential benefits of these tariffs, yet potential negatives, potential pitfalls of these tariffs as well. So let's touch on that a little bit. And then let's flow right into what you mentioned, Tony, is how have these tariffs so far impacted our economy and our stock market? And what's the outlook that they could, again, maybe pros and cons, the good and bads of how could these tariffs impact our markets as well?
Yeah, I'll start with what some of the positives. Obviously, the trade imbalance is what he's trying to do is have more jobs here in the U.S. That would be a positive.
Yep.
Now, the couple of things that that's the overall positive again, because usually when you're talking tariffs, you're referring to a tax. So it's like, how can that be positive? Well, more jobs, more fair trade, right? There's countries like, for example, Canada's putting these huge tariffs on different things like dairy and cheese, which is they've been doing it for years and decades of
Mhm.
that 100% tariff on stuff. It's like, that sounds crazy. Now, what would be a potential negative? One of the big imports we get from Canada, surprisingly, is even though we're the largest U.S. producer of oil, we import their crude oil. And the reason we import is because our refineries are based on heavy crude, and that's what we get from Canada. So we have about $95 billion of crude coming into the U.S., which again, that goes right to the refiners, which goes right to your transportation. And that's one of the tenets of Trump saying, drill baby drill. He wants to
Mhm.
lower price of oil, lower for the consumer. Now, if we add that 25% tax onto crude oil coming into the country, that could, again, it's going to have to be paid by either the consumer, the importer, or the exporter, or the combination, probably a combination of the two, but
Mhm.
or three. But if we put a 25%, on, especially in the Midwest where you guys are in Minneapolis, we have a refiner here. It's like they're depending, that oil is directly coming not from the U.S., but it's coming from Canada. So if we put a
Absolutely. Yeah.
25%, that's going to put a tax on everybody, and just you're in Michigan and here in Minnesota, a lot of people are driving. That's an expense. And even if you're not driving, you're getting package delivered from Amazon, everything
Mhm.
else. So that's why oil prices, that would be a slight negative, especially if we weren't drilling here enough to offset the increase. So and one way of resolving that ultimately would be to adjust our refiner system to be less depending on heavy crude and Canada. But
Sure.
that takes time. That's not an overnight switch. That's multi years and
Mhm.
potentially a decade or two, right? Because you need to get things approved and the company who's going to put that capital up front. But ultimately, maybe that's some of the positive that could happen as well. And then on the flip side, going to the southern border, we get a lot of our vegetables and produce from there. So if we
Mhm.
put a
Yeah.
25% tax on that, just for one thing, I don't know if you guys like Chipotle or anything like that, but if avocados, we import about 90% of our avocados from Mexico. So you put a 25% tax on that. It's a smaller dollar item, right? But that still would be material. You would maybe change your
Sure.
diet or find a substitute. And that's the other thing with tariffs, right? That causes you to maybe your buying habits as a consumer would change. Maybe if oil price went up that much, I would maybe commute less, or ride share, things like that. People find a way to try to save that dollar. So those are some of the things, the big picture. The other thing is automotives. That could be an impact, like I mentioned, that $5,000 on an SUV, that
Mhm.
would have an impact as well. I mean, the hard thing is it's really hard for to get what is the immediate benefit, because these tariffs generally, it's going to be a longer term. Just like that, China is a perfect example, going from 22% of our imports down to 13.5. I think most Americans, left or right, would agree that's a positive thing.
That's a very good thing. Yeah,
Not
absolutely.
to be, so dependent on China. So, but it takes years and even the following administration to follow through to get that number to continue to go down. So
Yeah.
that's why when you put tariffs, immediately there could be some slight digestion period. And even now the Trump administration's come out the last couple of weeks and kind of talked about this kind of transition period. So again, and then if you're a farmer, one of our big exports that China could be taxing on is soybeans. That's a big industry. I think it's about 12 billion. I think I told a different number to you earlier, but that's a big number. If they, if we can't, so what are they going to do? So, if they're put a 25% tax on soybeans, maybe their consumers will find some other alternative. So
Sure.
that would be negative for our farmers. And, he had a call out during his State of the Union to farmers just to hang with me there. And that same thing happened in 2018. Maybe there'll be some kind of incentive plan for them to recoup
Sure.
a lot of sales, but there's a lot of moving parts, and that's why people are nervous, generally
Yeah.
speaking.
Yeah. And so we'll get into how all this is affecting the markets itself. But we need to take one more opportunity here, because I promised this. We're going to give away 10 more copies of the book real quick here. All you have to do is call Jason's team there at Great Lakes and say you heard about it on the show. 989-835-7203. There's no charge, no obligation, not even any postage. They'll send you out a copy of the book, but you can also set up a no charge, no obligation consultation and get your questions answered, get a financial and a retirement plan in place. All right, we're on Your Financial Empower Hour. Great show today, Jason. We've got Keith Gangl here. I know, Jason, you want to ask him about the current state of the market then.
Well, that's really true. I mean, there's a lot of my clients, a lot of my viewers out there on my YouTube channel right now, and a lot of my listeners are wondering, these tariffs, what's the potential impact on our market? And we've seen, beginning of the year, market was pretty positive for the first, 30, 40 days or so. You know better than I do, Keith. And then we saw some turbulence, some volatility. I think it's to be expected too, with a change of leadership and those types of things. But how much of this volatility that we've seen recently is due to these tariffs, do you guys think? And what do we think the outlook is? If these tariffs, I guess I don't know, what are maybe 1, 2, or 3 scenarios that we could see these tariffs having an impact on our stock market, which ultimately our portfolios, which is our money and our spending in retirement.
Yeah, certainly important. I'd like to back it up before we get into that conversation. Just the last 2 years, the market's been, when I'm talking markets, I'm referring to the S&P 500. They've been fantastic. In 23, we were at 25% plus. Same thing with 24. So net, when you combine those 2 years, we're up 60%. And this leads into our, thesis this year where we were saying the year of the umbrella. That means, we think things are generally going to be good. Our forecast is for that more of a normalized return, still positive, that 8 to 10 to 12%. And you're exactly right. The markets are up 4%. Markets are not cheap. I think the markets, these tariffs, market was kind of looking, sometimes it looks for reasons to sell off. And I think this tariffs is actually part of that. I don't think fundamentally it changes a whole lot going on with the companies right now. I mean, if we still get this lingering unknown, markets don't like uncertainty. So the more uncertain things become, like if you're a CEO of a company and you got a CapEx project of a refiner or some of these other names we talked about, or automobile manufacturers, like, okay, we're going to add another plant to Mexico. If you're in the U.S., like, well, that's probably not a good idea. If everything's going to be tariff, maybe we should be adding it to the U.S. So in the short term, I think it kind of makes the CEOs kind of pause and hold on what their CapEx plans, which is be slightly a negative or headwind for the overall economy. But the market's still pretty strong. We saw unemployment came in last week at 4.1%. And again, that's a very healthy number. That's near a 50-year low of 3.3%. So it's, I think this year it probably does go up a little bit, at 4.1, maybe, start edge towards 5%. But that's a pretty good place to be, because if people are working, they have money in their pockets, they love to spend. Now, this tariff, I think, is just more noise. And again, all the stuff that's, this 25% tariff already on Canada and Mexico in place already as of last month, but they've X'd out so many parts of stuff that they're not going to do till April. I think as we fast forward here a few weeks, I think that kind of gets negotiated down again. I think there'll be some number. And if you go back to actually the first time he was in administration, I think it was a 10% tariff he was going to put on Canada and Mexico, and nothing ever ended up happening. He did some negotiation behind the scenes and got some jobs and things like that, some border security, and that alleviated the tariffs. Now, this time, the other side didn't budge yet quite as much, and now we got the 25%, but they're Xing out so much of it, it's really not that impactful. Now, again, if they do a full 25% on all products, and I think that is a tax, that's going to be bad. Markets won't look like that, and they could probably chop down a little bit more. I think we're in the kind of the unknown phase, but if you fast forward, I would say just even a few months, I think a lot of these tariffs will be more known. The CEOs of these companies can go back to, making their investments. And I think that's kind of, we're probably in a very choppy period, but, like you do for your clients, we've been talking about the year of umbrella. That means if you were a 60-40 client, means you had 60% exposure to the stock market, 40 to bond side of things. That last 2 years is more like a 70-30. So clients need to rebalance and do a good job with that. And we have these buffered portfolios and things like that you can kind of hedge some of these downside and provide some protection, but still allow you to participate in the market upside. So that's the kind of things we're looking at. We're giving the yellow light to a lot of our advisors and clients before the year started. It's like, man, we've had 2 fantastic years. Corrections are normal, and we're down roughly around 7% from the peak, year to date, from up 4% to down 2 or 3 right now. They're uncomfortable and everybody gets nervous, but corrections are normal. We just haven't had that many recently, and so it's just stick to your plan. If your plan is that your objectives, you're meeting your objectives on your income side of things, and you were kind of over earning for the last 2 years, expect more normalized returns here. So it's like, and that's it. We're in that phase right now. The market was expensive coming this year, almost at 22 times. Now we're at barely above 20 times forward PE multiples. And that's not a bad place to be, dipping your toe. I'm finding a lot more buy ideas for my portfolios than I was just a few weeks ago, just because the market's becoming a little bit on sale. Now, is it a, pound the table, all full steam ahead at these levels? I
Probably
don't
not.
think so, because I think there's still a lot of unknowns out there.
Yeah.
But it's certainly not. I'm hearing all this tariff news. It's all going to be bad. I'm going to sell everything. That's not, we tell people not to do that as well. And that's why we want to be out in front and talking about tariffs. What are tariffs? They are a tax. Okay. How impactful are they? Do they do any good? Yeah. They just, changed our dynamic with China from 21 down to 13 and a half. I think that means a lot just from our national security besides economic stuff. So that, makes our country stronger going forward. And I think that we're kind of in this phase right now. I think we'll get them figured out. Well, if companies are still producing their earnings like they have been, people are working, they continue to spend. You'll be chasing your kids around, driving around. So
There's no doubt.
there's no doubt about that. And Tony's gonna be doing his thing. And
Oh,
it's
yeah.
just like people love to spend. And if we're working, we'll continue to spend. Again, we'll get this noise of tariffs behind us at some point in time. Now, Trump could be using these, through his whole presidency of different countries. He doesn't like some term with him, right? He's the art of the deal, and I think he will heavily use these. But I think this front end's loaded on some of the things like that. But the other thing we talk about is tax cuts. That was still expected to in 2025. If nothing happens, taxes are going up. I think with the administration, which everybody's forgetting to talk about because it's not front and center, is those taxes are going to go up if it doesn't happen. So I think there'll be some positive kind of bills working its way here through in the next 3 to 6 months, which maybe gets the market excited again and forget about the tariffs and let's focus on some of the good stuff.
Yeah, absolutely. No, I think so. This has been a great show. So again, Keith, thank you so much for sharing this with myself and all my viewers and all my listeners and with Tony. A couple takeaways there is, as you mentioned, it's kind of like the year of the umbrella, right? So be prepared for some rain, be prepared for some turbulence. We didn't say the parachute. We're not jumping out and abandoning the ship. There's going to be some turbulence, right? There's going to be expected. If you remember 2023, 2024, the stock market was almost straight up and down 2 years in a row. It was great, but don't get complacent with that. Don't get used to and expecting that because that's not normal. As Keith mentioned, volatility and turbulence is normal. The market, I believe the S&P 500 actually corrects itself anywhere from 2 to 3 times a year, at least 5 to 10% per time. So that we're in one right now. Don't freak out. Don't panic. It's okay. This is normal. Now, he also mentioned stick to your long-term plan. All of my families, if you're one of my clients, you know exactly what he's talking about. Is we have a written financial empowerment plan that tells us exactly why we own what we own. If this happens, we're going to do this. If that happens, we're going to do that. And here's what we're not going to do, and that's panic. We're not going to panic. We're going to remember the long-term objectives, our long-term vision and goals. Are we rebalancing now after the market was up so well in 2023 and 24? Absolutely we are. So again, take advantage of the opportunities that are out there, but don't panic. Don't freak out. Keep your long-term plans, your long-term vision in mind, and reallocate, rebalance, keep an eye on it. Bring the umbrella. When rain starts coming out, pull out the umbrella, right? Don't go hide. Don't go put your head in a hole and hide. Just pull out your umbrella, stick to your plan. Sunny days are coming. The rain will go away. Pull the umbrella out and we'll have more positives again. And again, it's that long-term approach. And Keith, you mentioned it with these tariffs. Tariffs right now, they're scary short-term and they're volatile short-term, but long-term, most of them are going to end up having a pretty positive impact long-term for the United States. So keep your long-term vision in mind. Keep your long-term plan in mind. If you have any questions or concerns at all about anything Keith talked about on the show today, tariffs, Canada, Japan, China, anything good, bad, or anything else, please reach out to myself or another member of my team here at my office. We can get direct connectivity to Keith, another member of his team, to ask them questions directly on the phone, in an email back and forth, or even face-to-face next time they're in town, whether it be anything on today's show or anything else in your portfolio or in your questions or concerns about retirement. Please reach out to us here at the office. Another member of my team, myself, more than happy to help you. And I know the entire team at Grady Investments would be happy to jump on board as well. So I think we're probably almost out of the show time today, aren't we, Tony?
Yeah, we are. Thanks, guys. Great show today. Again, listeners, call 989-835-7203. And that does it for today's episode of your Financial Empower Hour.